Hello, good morning, Texas. Good morning, Louisiana. Good morning, world. We are live on Impact Money, live on the Smart Money Culture Network, as well as streaming around the world. David, my dear brother, how are you?
Yes, fantastic, fantastic. It's money in the morning and everything is going well. It's dark and gloomy, rainy over here in Ireland, but we're feeling pretty good and working it.
It is dark and gloomy. So is Ireland? Ireland is a bit like London. I
It's a
feel like,
bit,
huh?
it's a bit, it's a little
Wet or
colder.
no? It's more sunny, I think.
It's a little colder than London. We get a little more of the wind coming off the ocean, and we block it from England there.
Block the wind. Well, there you
Yep.
go. Of course, my brother David is basically an expat these days, living in Europe and around, in and out of the Shenzhen zone, Dubai, all these places. It is crazy and another crazy day, of course, that we have going on here. These farmer protests are so interesting. I can't even
Yeah, they're
keep
very
up,
interesting. They're
huh?
very interesting. They're very interesting. They have a lot of different points that they're protesting against, and we're gonna see who's gonna win, who's gonna be in most favor of the cash flow.
Well, that's exactly right. Right? They have there's multiple points. Like I put out a quick video earlier, just a little bit ago. I'll show you, and it's the protesters and they're the farming protest, and they are protesting something. They're blocking the Belgian border, and I don't know. Is this connected as well to the protesters that were protesting in front of the EU in Brussels? I'm not sure. I'm not sure. But here they are right here. No, that's not that. Where is
I do find it a little difficult to get a perfect grasp on what they're doing. They don't seem to have a front man, a front leader that's speaking. They're definitely congregated all together.
They need a front man. David, maybe you're the man for the job.
No, 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 no. I'll just have a barbecue and bring some drinks and I'll tell them to keep that manure way on the other side of the city.
Keep that manure on the other side of the city, farmers. I don't know. I guess it didn't. I guess it didn't post. Sometimes it does that. So anyway, um,
Post it live.
I can post it live. Let me just find it here. Um, anyway, a couple other things I wanted to talk about. Anyway, before we even get to that, so we have, of course, the man behind the movement there, the great Donald Trump, and he is working hard now. This border bill, as they're calling it, um, but of course, I don't think people are really that. I don't know. I feel like the days of people just, buying that this is, you know, good for them are kind of over. I mean, $118 billion bill, and everyone's just supposed to kind of be like okay with it. Like, I don't know, man. I think that people are wising up.
Yeah. Well, he's not in support of this bill, correct?
Correct. I mean, it's $118 billion. They're like sending it all over, everywhere but here. Um, is what they're doing, right? I mean, it's like crazy. So it's $118 billion. I'll break that down a little bit for everybody, but it's basically just giving away all kinds of our money, and I don't think anybody really thinks that we should do it at this point. I don't think anybody trusts our congressional leaders. I guess that's
Right.
yeah.
I mean, we've
Everyone's
seen
like,
it going on for the last couple of years now, and so much money is not to be accounted for. How can we trust them?
I mean, how can we trust these guys? And it's like the breakdown of the bill is just absolutely ridiculous. Well, first of all, and we throw around $118 billion like it's like nothing. It's like, oh yeah, it's $118 billion. Like, oh okay, yeah, sure. We'll just mint that out of thin air, and everything will be fine. Trust us, guys. Just trust us. It'll be fine. And nobody trusts these guys anymore. I mean, of course, we have the Speaker of the House. This guy, of course, they all ran around and called him MAGA. He was MAGA Mike Johnson there for a while, right? For about 5 minutes, he was MAGA Mike.
Yeah, that was short-lived.
It was short lived, that's for sure. And then it wasn't MAGA Mike anymore. He was
No.
Deep State Mike. So yeah, let me. I was just obviously I have to double tasking here in the morning as we do. But let me go over to my feed. I did put up some of the good stuff here. Boom boom. Okay. This is, of course, they're having a meltdown. My feed is just a little funny this morning. That's kind of the problem. But anyway, they're having a total meltdown with Trump in over in or with Tucker over in Russia. I mean, just total and complete meltdown.
Really?
Oh my gosh, the media just cannot get over themselves. They're just they're really having a meltdown. I'll play that clip in a minute, but here is the one with Trump. Oh, I thought this was interesting. Okay, here it is. All right.
End of their career. This is a Democrat. Well, it's hard to believe because I think it probably would mean the end of their career. This is a Democrat trap. It's a trap for Republicans that would be so stupid, so foolish to sign a bill like this. This bill can't be signed. And it's not only that, it's massive amounts of money going out of town, as we say, going out of town, billions and billions and billions of dollars. And it's so bad on the border. I've never seen anything like it. Actually, it's one of the worst, one of the dumbest bills I've ever seen. I think it's hard to believe because I think it probably would mean the end of their career. This is a Democrat trap. It's a trap for Republicans that would be so stupid, so foolish to sign a bill like this. This bill can't be signed. And it's not only that, it's massive amounts of money going.
He's so great, with all how he talks about it. It was just horrible. It's the worst thing I ever saw. It's a horrible.
They say 100 million, or they say 100 billion, and it sounds like they're saying 100 million, but they're saying billion.
$118 billion. Like, and then it's like the breakdown is just absolutely ridiculous as well. Let me see if I have that pulled up here. I did actually have that. Let me just look here. Boom, 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 boom. I have now, and my Annie rehearsals are really just these things are no joke now. It was 10 o'clock and now it's like 11. Now I think it's supposed to get a little bit better as we go into the shows. Here it is right here. Here it is. Share this tab. Okay. The Senate bill, you see this, right? Yes. Okay. The Senate bill includes billions of dollars for everything except our border. You have 1.4 billion to Israel, 60 billion to the Ukraine, 2.3 for refugees, Ukrainian refugees, 650 million for the border wall. Now it's just so funny, right? Because they just like slip in the M there. Everything else is a B. Everything else is billions. Everything else is billions. Your border, though, where like we have like literally millions of people, like thousands of people a day coming across. We have no idea who they are, and we're like at war bombing everybody around the globe who would want to come in and attack us. Million.
Yeah.
$650 million for the border wall, and nobody thinks that these guys are going to build any kind of border wall. I mean, it's a joke.
No, they're not going to get too much done there. And it is interesting. Those first numbers really make a lot of enemies with those first numbers.
They make a lot of enemies with those first numbers. No doubt about it. $4 billion to hire new asylum apparatus. This is obviously my typing. I made this. That's my words. New asylum system. So basically, though, this what they're doing as well is they're like don't want to say deputizing, but basically they're giving Mayorkas, who they've been like bringing into Congress to try to impeach like over and over again, the power to actually just grant asylum.
Wow.
So he'll actually have the power to just grant asylum to people. Anyway, $26 billion to replenish U.S. weapons that were sent to Ukraine, Taiwan, and Israel. $4.83 billion to deter China in the Indo-Pacific region. I mean, that's a lot of fluff. I got to tell you. So this, anytime you see this deter China, blah blah blah. I mean, that's total fluff. Total fluff there. That's like the pad, and of course you got 10% to the big guy. So 118. You know, I mean, the fluff in this bill, I can tell you guys, is absolutely crazy. And that's why they're going to have such a hard time to actually stop it. I mean, I hope they'll be able to stop it, obviously, but they might not be. But the thing is that it's so much money that Congress, they're just like, they're just chomping at the bit, wanting to pass this bill because it means so much money for them. There's a lot of pork. Now, this is interesting too, and we'll bring Matt on here in a couple minutes, but this is interesting from Trump on the central banking cabal. What I said was interesting comment from Trump on the central banking cabal deep state crashing the market when he won Iowa and New Hampshire primaries. I believe they may crash the markets again if Congress does not approve this $118 billion bill. Want to come to my Tea Party? Haha. So the deal is on this, and I'll play this short clip. But every time that they want to pass, and this is what I've noticed over the last year, okay? Every time that they want to pass, and whether it's a stopgap funding bill or whether it's whatever it is, every time that they want to pass one of these bills, there's finally, I can't find this one that I want here. Anyway, they'll crash the markets. And so if it looks like this bill is not going to get passed, you watch. I bet they crash the markets and they try to scare everybody into.
Yeah, that's some spiteful action.
Yeah, some spiteful action. But I do believe that is, I do believe that's what we're dealing with. So this is Trump when he was talking.
That's what I call some dirty politics.
That is some dirty politics, David. You are correct.
I like President Giolotti. He's a very good friend of mine during my term.
Well, look, COVID cover-up, intellectual property
when
theft.
COVID came,
the list is long from our number on adversaries. I don't know if he's a friend.
But I got along with him great. I'm not sure he loved what I was doing because I was, getting along with him.
I don't think he wants you in the White House, Mr.
No,
President.
he doesn't. The market almost crashed when I won Iowa and New Hampshire. The market went down tremendously. Look, I like President Giolotti. He was a very good friend of mine during my term.
Well, look, COVID cover-up, intellectual property
when
theft.
COVID came,
the list is long from our number on adversaries. I don't know if he's a friend.
But I got along with him great. I'm not sure he loved what I was doing because I was, getting along with him.
I don't think he wants you in the White House, Mr. President.
No, he doesn't. The market almost crashed when I won Iowa and New Hampshire. The market went down tremendously. Look, I like President Giolotti.
I think everybody should hear it because a lot of people think, oh, the market's going to go up if Trump is elected. And I actually disagree. Retail, we could push the market, but I don't think we really do push the market. And I think that if Trump is elected and it looks like he's going to get elected, the markets are going to go down. Then optimism will kick in. Okay. But I think in general, these guys are going to crash the markets. We have a hostile takeover of the civilized world, people. and these guys are big money guys. So we're just coming off of commercials here, and I'm keeping an eye on it in a second over here on Smart Money Culture. And as we do, we're going to bring in Matt with Eve and talk about the markets. But pretty interesting stuff here. Let me just one more clip. I mean, pretty interesting. And then while we're waiting here, I think we're about to come back in over there. I wanted to just show this. Where is this? It's on this tab over here, I think. Let me just check again over here. Okay, we are back. Welcome. Thanks for joining us in Texas and in Louisiana on the Smart Money Culture TV network. We're going to bring in the great Sir Matt Dixon, the Great, here with Eve. How are you, Matt?
Good morning. Still got a nasty cold, but I'm pleased to be here. Got some great stuff to share with you.
Being here for sure.
Particularly as you're talking market crashes. So I wasn't expecting that. It's actually amazing how each day you're talking about something that I've already thought about, and it just ties in beautifully. So I'm just going to go straight into presenting the screen. And let's see what you think of this. So hopefully you can see my screen there.
Yes, we can. Black Friday.
So do you know the origins of all these black stock market days? So, I mean, did you know that Black Friday it's not just about a sales day. It actually originated with the stock market crash back in 1869. So there's a couple of guys who actually designed or set up the stock market crash at the time, and it was a really, really terrible crash, and that was called Black Friday. So that was back in 1869, as I say. So next big crash, as we all know, next major crash was 1929. And here's a picture of some guy, poor guy, selling his car for $100 because he's lost everything on the stock market. So, obviously that was one of the greatest crashes of all time. We have, and that was Black Tuesday back in 1929. So we had Black Friday in 1869. We had Black Tuesday in 1929. Then we had Black Monday in 1987. And you can see here, the Dow lost 22.61% in a single day's drop. So tremendous. And we can't tell these things in advance. Before it, the market was really riding high. And then all of a sudden, a real massive shock to the market. So we've got to be aware that these things can happen at any time. But there are some warning signs. The next one that you're probably not quite so aware of was Black Wednesday, I think this one was. And this was to do with the UK falling out of the exchange rate mechanism with Europe, the European exchange rate mechanism. So that was a big day for the UK and for Europe.
What year was that?
That was 1992.
Okay.
So this is quite interesting because I'm looking here, and this is not my work. This is just something I'm using to illustrate. The Dow Jones, originally started in 1896. Obviously, stock markets started before that, but the Dow 30 actually started in 1896. And we can see the rise here to 1929, and you can see the sharp crash move down there in that wave there. And then we've had this long rise from 1932 all the way to today, basically. But along the way, we have had some serious setbacks. So that was the crash of 29. The next probably major crash, and this was actually during my lifetime, I can vaguely remember this, in 1974. There was a very serious stock market crash then to do with an oil crisis there was at the time, and a long drawn out stock market crash. And that's very typical of the kind of wedge triangle pattern that we have there in a wave 4. So you have this rule of alternation. Wave 2 is always a different waveform than wave 4, or virtually always. And that's what we see. We see a very simple zigzag, ABC zigzag in wave 2. And then wave 4 at the same cycle degree is basically this complex sideways movement during the crash in the early 70s. And when I talk about cycles, I've talked to you about different fractals. like Russian dolls, waves within waves within waves. And we have the big super cycle degree, which can be over more than 100 years, as we see here. And then cycle degree, primary, intermediate, and so on and so on. There's all different degrees, right down to minute degrees. Excuse me. So we watch these cycle degrees within Elliott Wave because there are Fibonacci relationships within particular cycles. So, for example, we can see here from 1974, we moved up in a wave 1 in this reddish, maroonish color, wave 1, back in wave 2. Then we had wave 3. And wave 3 was exactly 4.236 times wave 1. Now that, again, is a very important Fibonacci number, 4.236. So I won't go into how you derive them. It's relatively simple. But there are Fibonacci numbers all the way through stock market history. So we can see, as I say, right from the start, now about close to 130 years ago now, these waves and then the Fibonacci relationships that show the terminations of the waves. And we can see projections of where we expect waves to go as well. So this is actually wrong about this, and I can actually clearly see when we look in finer detail why he's wrong at the end of it. But overall, it's actually a really good illustration of stock market, and it looks as though we are in a wave 5 because we can actually see what's called bearish divergence here, where we're basically getting higher highs on the price and lower highs on the RSI. That's telling us that we're moving towards a turning point in the market, which is quite interesting to keep that in mind. So this is looking at the more recent history from 1998, and we can see here, and we can actually, delineate the stock markets by crashes and big events. So 2000, we had that dot-com boom and bust, if you remember that. I was certainly lived through that. Yeah. So we had an ABC correction down there, which was quite a serious correction down. And it actually turned out to be a larger flat correction. So we moved down ABC, which is a larger A wave, then ABC up in a larger B wave. That took us to 2007. And then remember the big crash, the 2007 with Goldman Sachs and, all those big names. Massive stock market crash there, where I think the S&P went down to 666, didn't it? So, massive crash there. So in a wave, a big flat wave correction there, taking us to March 2009. Then we started to climb from there. And that's where money printing started, QE, the quantitative easing of money printing. And that's how they...
Yeah, that was... Who was that? Was that Clinton? What year was that? No, Clinton.
That was 2009 was when the QE started.
Obama,
right.
I mean, it's the central bank, but yeah, I was just trying to, in my mind.
Yeah.
Okay.
Yeah, so quite
quantitative easing, they called it. Everyone's like, what is quantitative easing?
Yeah, I mean, as I said the other day, it was started probably 10 years or so earlier by the Japanese. They experimented with it because they were suffering deflation for a long time. They wanted to reflate their economy, and so they started printing money, and that was how the experiment started. So the US took it up in 2009, and obviously Europe and UK and everyone now. It's normal monetary policy now. They basically just print money when they need it. So when you talk about $118 billion spending bill, it just means they turn the printing presses on. Not literally, but they just print a bit more money.
The tax is not even like everybody's worried about the tax, and I understand we all have to pay the tax, but the tax it's not even working that way anymore. It doesn't matter how much money they bring on tax. The tax is immaterial. All the tax is the burn. It helps with them with inflation, but they don't need the tax. They just take it anyway by way of printing the money.
Yeah, it's really interesting, actually. The Fed chair, Jerome Powell, did an interview the other day after the Fed meeting. He did an interview, and he actually admitted that this financial situation is not sustainable. And for the Fed chair to come out and say that is really quite something. Very, very honest. So that was amazing. He said it's not sustainable. So interestingly, you can see here we're moving up towards, and I think this wave 4 here is actually very much more sideways, and we're pushing a bit later on than this. That's why I said I don't like his wave count here. Wave 3 is way too small. Wave 3 is nearly always the extended wave. Wave 1 is very rarely the extended wave. So I don't like this final bit of the count. And in fact, it's proven to be wrong now, looking back. So we're moving up. I mean, we're 38,000-ish on the Dow, and we've still probably got higher to go before we top out in this in the final wave. So again, looking at an even shorter time frame here, we can see that we've still got. It's actually again got it. He's got it wrong towards the end because wave 3 was up here somewhere. We're messing about in wave 4. We've still got another wave higher to go, it seems. So, but when that comes, it could be very, very substantial, the correction, because it will be one of those big market crashes. So at the end of one of these big waves, at the end of a big wave 5 and an even bigger wave 3. So we are looking, I say looking forward, I'm not looking forward in a nice way, to there's going to be a major stock market crash in probably not too distant future. But when I say that, this is looking over 100 years of history. So a year or two is neither here nor there.
Right.
So we're probably talking, quite possibly talking 24, 25, 2024, 2025, somewhere around that sort of time frame potentially. So this is just looking at it in the shorter time frame using my wave basis charts that I use. And this is showing that final move up to, we're around that 38,000 mark now, but showing that we still have quite a bit higher to go. So I still believe that the money printing and the more, probably more importantly, the reduction in interest rates that we will see, I would say 99% certain, we will see multiple interest rate falls this year. That will push the stock market higher because it means monetary policy is easier. There'll be more money in the economy, more to spend on investments, etc. So it will push the markets higher. Here's my own personal chart. Excuse me, that I put together again, just showing expectation of higher to go. I think that big move up anyway. They speak for themselves. We have higher to go there really, and we've actually fallen out of overbought territory on RSI. That was this area here in the green here, showing very much overbought. When RSI goes over 70, it's called overbought. We're actually right down that 60 area. So there's strong potential and likelihood that we'll push higher because very often you'll see a peak in RSI, then a pullback before a final peak, much even greater peak in RSI would be the final move in the market. So I do think markets, as I said, consistently, the markets are higher to go. Here's the old dollar index that we look at. And, I think we're still in this correction higher. Everybody keeps calling the top of it, but there's no signs at the moment. And in fact, we have here what is called hidden bearish divergence. This is showing when there's higher lows on the price and lower lows on RSI, and it tells you of a continuation. So it's different to normal divergence. This is called hidden bullish divergence. And it told you that from this point here, you expected the dollar index to appreciate, and that's exactly what happened. So some of these indicators, this is actually one of the most predictive indicators there is in terms of stock markets, cryptocurrencies, basically the dollar currencies is very, very predictive. One of the best indicators. Combine it with a couple of others, and you've got some really good analysis tools there.
So run that one just real quick. Run that one by again. So when you have the RSI.
So basically, what you're doing here, this is the price chart up here.
Yep.
So you're connecting, and you don't use the spikes, you use the solid bodies because RSI is calculated on closing prices for these candles. So basically, when you're seeing higher lows on the price, so you can see I'm connecting the lows, not the highs up here, but the lows down here.
Yep.
So I'm connecting the low here to the low here. So you can see you've got a higher low.
Yep.
And then you connect the very corresponding RSI, the lows here, and you can see the low. So on price, it's going from low to high. But on RSI, it's going from high to low. So that's what's called divergence because they're diverging, going in opposite directions.
Bullish divergence.
But this particular one is called hidden bullish divergence. So it's not that's actually hidden, but it's actually just a different meaning to regular bullish divergence. So this one is telling you of a continuation in this upward trend in price, and you can see that's very precisely what happened. So again, when you combine this with other indicators, you never use one indicator in isolation, but combine it with a couple of others and you get some really good signals that are very powerful. So just moving on to how this all reflects to our favorite asset. When I say our favorite, I love it because of its limited supply and, you know, the great demand that's building. We've had the retail demand, now we've got institutional demand coming, and people wonder, how can it push higher? Well, they thought that, you know, when it fell back here, how can it push, how can it survive? And yet it did, and and it just keeps surviving and pushing up because the fundamentals behind it are really solid. So looking at Bitcoin long term, this is one of the wave counts, and I have no reason necessarily not to believe it. But basically it's telling us we had a wave at 3 up here, a wave 4 correction in ABC correction down, and we're pushing up in a wave 5, which should take us above this wave 3 to new all-time highs. So even the immediate cycle should take us to this grey box above 60,000. When I say immediate, we're still talking maybe you know, months away. And shorter term, I'll just touch on shorter term. It's a different story, but I'm just saying, looking at a longer term picture, we should see some reasonably good highs. We should probably have an initial peak around here. It'll pull back again and then push up again. So nothing moves in a straight line, as we can clearly see. So here is my short-term representation. This is really short-term. So we're just looking at January and February so far of this year. And we can see we had the peak that was the ETF approval peak here, that spike there. And that's actually a very typical candlestick telling us that there's going to be downside to come. And we got some solid downside there. It came down in a very nice ABC wave 4. And then we're pushing up what appears to be a wave 1 up. I think we've had an ABC A down, ABC B up, and we're probably going to push down in a wave C. Not much lower, maybe 41-ish area perhaps, before we then push up again, hopefully above this previous high. And my target is 49,900 as an initial target. It could blast through there, but that is a very important Fibonacci extension of the previous waves that we had. So there's a couple of Fibonacci confluences there where different timeframes agree together and give us this 49.9 area as the next target. So I think that's a really good open expectation for Bitcoin moving forward. So you know, quite a bit to digest there, especially when we try and think of it in the context of, you know, the long-term stock market, what's happened over all this time. But it all fits very, very well into the Elliott wave theory and the Fibonacci extensions.
Pretty interesting. One of the things that's most interesting is these numbers. You know, you talk about the 1 point number and then the 2 point number.
Yeah, there's 1.6, there's 1.382, there's 1.618, and there's 4.236, there's 2.618. All these are Fibonacci numbers. So there's a sequence of Fibonacci numbers, a very simple sequence. You just start with 0, then 1, and add them together. 0 and 1 is 1. So you go 0, 1, 1, then 1 and 1 is 2, then 1 and 2 is 3, then 2 and 3 is 5, and then 5 and 3 is 8. So it goes 1, 2, 3, 5, 8, 13, 21, 34, 55. So this is the Fibonacci sequence of numbers. And then all you have to do is divide one number by the next number to it, and then you get these Fibonacci numbers, like 0.618. And you know, the 1.618, the 2.618, the 4.236, and so on. There are all sorts of Fibonacci numbers come out of this. And what's really strange is these appear not only within the stock market, but they actually appear throughout nature, within the growth of trees, within spirals of galaxies, within the patterns on seashells, within the way leaves grow on trees, and so on, so on, so on. There's so many Fibonacci is related to virtually everything in nature, but it was noticed that it also relates to stock market prices and projections of where prices go. Now, It may be, as some say, it could be just a self-fulfilling thing. Everyone believes it, so it happens.
Right.
But it does actually happen, as I say, throughout nature. And it's quite amazing. You wouldn't think of any particular reason why a price might reverse at a particular Fibonacci extension, but it happens. And, you know, we can look at, you know, the expectation of these things happening, you know, the possibilities and probabilities. And within certain waves, you know, you get a certain projection for wave 2 after wave 1. You get a certain projection for wave 3, which is normally at least minimum 1.618, or the next one would likely be 2.618 and 4.236 and so on. So these, you know, they turn on these levels. It's amazing. And when you relate it to Elliott Wave, and that's behavioral analysis, that's how people think, that's crowd behavior. Crowd behavior is actually defined by these Fibonacci extension numbers, which again is just amazing, because even the proportions of the human body are actually defined by Fibonacci numbers. You know, it's a study in itself. It's amazing.
It is. It really is amazing. You know, the universe is like that a lot. I would say nature is like that a lot. As we go and study space and everything else. It is quite interesting the way those things work. And like you said, I have often thought that it could be a self-fulfilling prophecy, you know, as you have the different people working on the charts and everything else. But in the end, it doesn't really matter why it happens. If you're able to use it in order to take advantage of it and use it for your gains, then it doesn't really matter. Now, I had a quick question. I think we're going on to commercials here as well, again on Smart Money Culture TV. So I wanted to thank everybody for joining there. I think we're coming into our commercial here again. I wanted to ask you though. I had and thanks for watching on Smart Money Culture TV, and we'll be back right after the commercials. I was reading yesterday that there is every 17 years there is a crash. Do you know if there's any truth to that, or does that ring true? Have you heard that before?
There are lots of cycles. There's one called Hurst cycle analysis. There are many cycle analyses that you can use. I don't put a great deal of store in them. There are sometimes cycles, but I actually don't believe that stock market in that way is so repetitive in terms of actual cycles. But I know I mean, this guy actually uses Hurst analysis, and you can see clearly he got the grand super cycle wrong here in terms of timing. He actually expected it. It's not shown on this particular chart, but cycle analysis proved to be wrong here. If it was that easy, everybody would do it. It would be self-fulfilling. Unfortunately, it doesn't happen. Everyone was expecting a crash back in 2022, 2021, 2022. It didn't happen. And, you know, again, unfortunately, it's not as simple as that. We have to do more in-depth analysis than just look at what happened previously. And that's why I don't like this analysis where people say, oh, this chart shape happened back in, you know, 2016 or whatever, and it's just going to repeat itself because it started off looking the same. You know, I said that book by Burton and Malkiel, A Random Walk Down Wall Street, tells you that from the past, just looking at past pictures and cycles of the market, you cannot predict the future. And even with this Fibonacci and Elliott Wave and so on, it's not quite as easy. You know, people study this for many, many years, and there's only probabilities, there's no certainties. So the fact, you know, a wave 3 would normally go to a minimum 1.618. But if you end up selling at 1.618, it could continue all the way to 4.236 or beyond that as well, further Fibonacci extensions. So nothing is simple. Everything is probability. There is no certainty in trading, but there are probabilities. If we use those probabilities, then, you know, we're onto a good thing. And just finally here, this is showing 3 wave degrees, all terminating around between 41,000 and 43,000-ish for the Dow. So we're not there yet. We're about 38,000. So I said there's higher to go, but this shows at 3 cycle degrees, potentially the market topping out and getting that major correction. You can see here, talking about a wave 4, potentially going all the way to 2032. You know, a massive fall in the market, absolutely monumental potential fall in the market there. But
wow,
there yet.
Yeah, you're talking like wiping people out, liquidations left and right, bankruptcies, people on the streets.
Yeah. So this could be some major world events that would drive this. or maybe it's just the chickens come home to roost with all this money printing, which is unsustainable. As we said, even Jay Powell said it's not sustainable. So we don't know what the cause will be, but we need to be on alert, I would say. Use your risk reward analysis, but just be on alert that the markets don't always go in one direction. We've moved up historically over a long period of time, but we get like 1929. You see the magnitude of that pullback was absolutely horrendous. And even this small one here that you can hardly see, 1987. Remember the Dow fell 22% in a day in 1987. That was where this arrow is here.
Okay.
No, sorry, it was here.
Where was it?
Here, if you can see just there, that small, it's inconsequential in the big scheme of things, isn't it? It hardly means anything. But that was 22% fall in the market. People were wiped out. Leverage was wiped out.
Oh yeah.
It was horrendous. And then look at the 2007 crash, 2007, 8, 9. Again, fairly inconsequential over the long term, but at the time it was, the world stock markets were on the verge of total collapse. And it was actually their ingenuity in some ways with money printing that, you could say saved the day, but I think they probably, as I say, it was a sticking plaster. They should have dealt with it earlier rather than waiting for the actual crash then. I mean, with the dot-com boom and bust, we had a good warning sign there of what happens when markets are over leveraged. So, I think they should have learned the lessons before the crash came then. And then again, the COVID crisis, we remember how horrendous that was with the stock market, and with the Bitcoin came down to, what was it, 3,000 something, somewhere around that level. That was the COVID crisis. That's between this 3 and this 4 here, 2020. And look at it, small in the scheme of things, but this is what's projected potentially for the next big market crash. And you can see it's a whole scale of magnitude different to the previous crashes. So potentially we are looking at something quite serious.
Wow. Yeah, well, interesting. The Asian markets today, I don't know if you looked at them, but gosh, they're up very sharply. Which of course screams to me that they just printed up a bunch of money. The HSI is up 4%. The Shenzhen up 6%. Shanghai up 3%. I mean, these are big numbers for those stock markets.
It is, big numbers, and yet the Dow was down. The Dow was down 274 points.
Yeah. Futures are still kind of down. As I said, I think that, and I don't know if they're going to be able to get this bill through. Trump has come out very decidedly against this bill. I mean, telling everybody you cannot pass this bill. This is crazy, and he did that. You probably weren't paying attention so much to the American politics back then, but he did that back in, and I just wanted to show these numbers, just massive numbers here. He did that back when he was running before about the Supreme Court justice, and he blocked our current. He was able to stop them from putting Merrick Garland in as the Supreme Court justice, and of course now he's the Attorney General. Probably nice that it wasn't a Supreme Court justice, but when he comes out really strong against something, it seems like they're going to fall in line. But yeah, just to show these numbers, I mean the HSI here, this is the Chinese exchange, up 4%. I mean the Hang Seng, 1 year down.
I mean, this, by the way, is due to them basically pumping money into the markets, pumping liquidity. So this is, the Chinese financial authorities pumping money into the market to keep it afloat, because obviously we had Evergrande collapsing. There's a lot of financial stress now within China, and this is why they're trying to support the markets. And this is the result. It just creates more and more bubbles when the crash eventually comes, and that explains to a large extent why the next crash will potentially be so large, because these markets have been sustained with money printing, with liquidity pumping into the market for such a long time, that the bubbles are now really inflated, and when the crash comes, it will be very, very painful.
What goes up must comes down, right? That's Newton. Was that Newton that taught us that. Yeah, this
Sounds
is
like
big. Yeah, there's a big numbers, and then you can see as well, just as things start to go higher here, and even with them keeping the rates down, or not changing them, keeping them high rather, you can see just this. Well, because they just keep printing money is the idea. Basically, the central bank and the administrative state of the U.S. and it appears to be the same across across these countries, are able to print money without worrying about congressional approval and all these types of things. So even if the Fed is keeping the rates tight, seems like the money supply is still increasing.
Yeah, I mean, China just pumping money into the market. Obviously, that does boost the economy short term. And so they will be using more oil because the economy is more vibrant short term. There's more money being spent. So it has a positive effect on all the risk assets and, these commodities, which, there'll be more use of the commodities. But it doesn't really improve real productivity. It doesn't cause companies to become more efficient and more creative when it comes to building the economy, growing their businesses. This is just a very superficial thing, and that's why I say it's just inflating the bubble. It's not actually creating solid foundation for growth, and that's my argument against all this money printing they've done since 2000.
It's just horrible. It's just horrible. They're stealing the money. So, anyhow. Well, thank you so much, Matt. You sound a bit better today. I know you're still under the weather, but you sounded a bit better than yesterday. So hopefully that will, I'm sure that trend will continue.
Yeah, thanks very much. Yeah, pleasure to be here anyway.
Yeah, have some lemon and honey. Or
I just had a spoonful of honey before I came on here, actually, just to try and smooth the voice.
There you go. Well, thank you, Matt. It's always a pleasure.
Thanks, guys. Thanks, David. And thank you, everybody. Bye for now.
Awesome segment there by our good friend, Matt Dixon with Eve. Make sure to check out that platform, eve.io. Really great tools that they have there. AI and machine learning predicts markets. We made a bunch of money using that platform, eve.io. Matt is MD Trade. Matt Dixon, MD Trade. Make sure to follow him on X as well. Absolutely just crazy day. These numbers out of Asia. I mean, this is you don't see this. I mean, you would think that this was like blockbuster stuff going on here. I mean, these numbers are just huge. Like, they're huge. And you can see, of course, oil climbing up there as well. That means the dollar is sliding. But, I mean, 6% on the Shenzhen. Unbelievable. 4% on the Hang Seng. So that is we are going to feel that. All of these markets are interrelated. And that's going to come home. That is going to come home to roost. I am confident of that for sure. Just really pretty crazy here. I wanted to talk about this as well. We have protesters are rallying outside the state-run media in Sweden. And now some of the big news that came out yesterday was that Hungary had blocked Sweden's entrance into NATO. So Turkey had already given the go-ahead, and Sweden was going to join NATO, and then Hungary came in and blocked them. And the kind of murmur behind it was because Sweden came out and blasted Hungary for their stance on family values. I thought about how to say this correctly without offending people or whatever, but there's family first stance that is seen as anti-gay. But check this out. I mean, this is outside the state-run media.
Ge en applåd!
Yep. They're protesting
Nu tar vi en journalist på Fredsnytt. Hans namn är Torbjörn Riff.
Not a
Tillbaka i
huge,
SVT.
not a huge protest, but there it is. This is funny. The CNN, they're having a meltdown. They're having a meltdown over Tucker. Having a meltdown over Tucker over there in Moscow.
A massive shakeup in Kyiv is coming as Putin is trying to court the MAGA GOP in the United States. In fact, one of the leaders of the MAGA GOP is in Moscow tonight. It's the man you see
MAGA
here
GOP.
with the MAGA leader Donald Trump, Tucker Carlson. Possibly there in Moscow to interview Putin. Definitely there as a Putin supporting celebrity. Just listen to how Russian state media is breathlessly celebrating his visit.
Независимый журналист Такер Карлсон.
I'm doing a few things here. Let me just go back.
Independent journalist Tucker Carlson has flown to Russia from the U.S. via Turkey to Vnukovo Airport.
Он сходил в Большой театр на...
He saw Spartacus Ballet at the Bolshoi Theater, had lunch in a nice restaurant, went for a ride around town, rode the subway.
Здесь зарядил смартфон через USB-порты.
He charged his smartphone via USB port and connected to a fast and free Wi-Fi internet.
He charged his phone, although they're knowing the details about the fact that it was during USB port may give him reason to think twice about all of this. But look at them talking about him like a celebrity. Everything he does on camera, breathlessly repeated. Now, it is unclear if an interview between Putin and Carlson will take place, but if it does, it gives Putin a chance to sit down with a big supporter.
It might be worth asking yourself, since it is getting pretty serious, what is this really about? Why do I hate Putin so much? Has Putin ever called me a racist? Has he threatened to get me fired for disagreeing with him? Does he eat dogs? These are fair questions, and the answer to all of them is no. Vladimir Putin didn't do any of that.
I'll actually always remember watching that clip. I was standing in Ukraine 48 hours before the war began there. Well, Carlson then stood by Putin consistently all the way through. And that is why he can go to Moscow now without any fear of being summarily imprisoned. He's a hero. This was Putin's mouthpiece in the United States, somebody who had turned a blind eye to the atrocities committed by Putin because they were happening far away. Once vibrant towns turned to ruins, mass graves with dozens of bodies in the Kyiv suburbs, a theater full of innocent women and children sheltering, bombed, despite the giant world children written on the roof, more than 200,000 Ukrainian soldiers killed or injured. And tonight, Putin is trying to seize on the fact that Zelensky's military appears to be in turmoil, capitalizing on a moment of intense American political dysfunction and intensifying.
Well, she got one thing right. We definitely have complete political dysfunction in the United States.
Yeah,
this
right.
Is a fact. I'll tell you what, these guys over here in Washington, I can tell you guys, they don't know what to do. They don't know what to do. They know that they have to answer to the central bank, but they know that probably Trump is going to be the president. I think Trump will be the president. Now, that being said, guys, if they decide to enroll all of these people that have entered illegally and have them vote, Trump won't win the vote at that point. I mean, we can all show up. Even if we have 100 million people go and vote for President Trump, if they bring out all of these people who have entered illegally and get 101 million, then he still wouldn't win the vote. And I mean, we have like 50 million people that have entered this country illegally. Anyway, we've come to the end of the hour again. It is always a pleasure. Now, I think, and I'm going to keep an eye on this, but I think what happens is they keep our feed going on TV there in Texas for about a minute into the hour. So we have a minute to wind down here. Pretty interesting what we have going on, guys. And I can run through these numbers pretty quick. We have, of course, let me just add this back to the screen here. We have Bitcoin. Everybody's scared, and it is probably going to have another move up here. but then we are all predicting a move down. So it's hard to predict, when those waves go, but you can see kind of just sitting there at this point. You can see these numbers here, and Tether, BNB, everything's kind of tepid, down a little bit. This is the weekly number right here. That's 7-day. Second number here is 24 hours. So you can see everything's pretty much down on the 24 hour, except Tron. Global Boost is actually up quite a bit. Just look at that real quick. I believe that's not the one I was looking for here. Coin. Yeah. Nice move in here for Global Boost. That's the coin that we started, the blockchain we started years ago. It's just like Bitcoin, meaning that you can't freeze it, seize it, stop it, any of that stuff. Okay. You can see, our valuation right now is less than $1 million. So you do your math. We're doing lots of shows, doing lots of stuff, and we're building a decentralized media network as well, updating the code multiple ways, updating the code that we currently have now, and also updating the new code using Rust with our impact. Good stuff going on, guys. Thank you so much for tuning in. We really love doing the shows. We love being on TV there in Texas and Louisiana. We love streaming on LinkedIn and X and YouTube and all these other ones. David, my brother, always a pleasure.
Yes, there you go, Bruce. See you soon.
Make sure, guys, to check out
Your voice is powerful. When combined with social engagement, it's a force for change. Decentralized media paired with free speech is the catalyst for an empowered world and a unified, invaluable ecosystem. Join Global Boost, become a champion of free speech, and help to reshape the future of media.